Hey everyone, welcome back to Corporate Decoder, the place where we break down the confusing world of business news and give you the real story. But first, a little something to chew on. What happens when a company tells you it's earning money but also give you a press release? Maybe they're just really excited, or maybe there's something more buried in the details. Let's dive in. EQT Corporation just dropped its report for the period ending July 22nd, 2025, and we're going to focus on exactly what they announced about their most recent financial performance. This isn't just about numbers, it's about understanding what those numbers mean for the company and for anyone watching its progress. So the core of this filing is pretty straightforward. EQT Corporation put out a press release on July 22nd, 2025 to share its financial results for the second quarter of that year. Think of this as the company's official update on how it's doing financially, straight from the horse's mouth. Now, this filing itself doesn't contain all the juicy financial details, but it does point us to where they are. It mentions that a news release dated July 2025 is attached as an exhibit. This exhibit is essentially the detailed announcement that EQT itself put out to tell everyone about its earnings. EQT is a big player in the energy sector, and its main stock listed on the New York Stock Exchange is what most investors watch very closely. When a company like EQT reports its earnings, people are really looking to see if the company made more money than expected or if it performed worse than anticipated. This type of report, called an 8K, is for significant events that shareholders should know about right away. In this case, the big event is the announcement of their second quarter earnings. It's their way of saying, hey public, here's how we're doing. The real substance of this filing as it relates to their financial performance is covered under a specific item. When companies file these reports, they have to categorize the information. This is where they are telling us they are reporting on their results and overall financial health. It's important to understand that the details within that news release are being furnished, not filed in the same way some other parts of a report are. What that means in simple terms is that EQT is providing this information for transparency, but it doesn't come with the same strict legal liability as if they were formally filing it under other sections of securities law. It's a subtle distinction, but it's there. Think of it as them sharing their lunch menu versus signing a legally binding contract for a meal. Now, while this particular filing doesn't contain the actual financial tables, we are going to dig into what the earnings announcement itself implies. Usually companies will compare their current earnings to the same period last year to show growth or decline. Investors would be looking at things like revenue, profit margins, and earnings per share. If EQT announced a strong quarter, it would likely mean they generated more sales than the previous year and perhaps did a better job of controlling costs, leading to higher profits. A weaker quarter might mean lower sales or higher costs, or both. Without the specific numbers from the news release, in this document itself, we can infer the market reaction is likely tied to how these earnings compare to what analysts and investors were expecting. If EQT beat expectations, it could send the stock price up. If it missed them, it might fall. Typically, a company might announce things like increased production volumes or improved efficiency in their operations as drivers of their financial results. They might also discuss things like commodity prices, which heavily influence energy companies like EQT, since the price of natural gas directly impacts their revenue and profitability. For instance, if natural gas prices were significantly higher in the second quarter of 2025 compared to the second quarter of 2024, it's highly probable their revenue and profits would have seen a bump. Conversely, if prices slumped, EQT might have reported lower earnings despite selling the same or even more gas. Now, looking at EQT Corporation's overall direction based on how these reports usually play out. EQT has been focused on being a leading producer of natural gas in the Appalachian Basin. Their strategy often involves acquiring reserves, optimizing their production operations, and managing their financial structure. When they report earnings, you're essentially seeing the results of that strategy in action. A strong earnings report suggests their operational and strategic decisions are paying off. A weak one might indicate challenges in the market or that their strategy needs adjustments. One of the key things to watch with any energy company is how they manage financial reporting and transparency. By furnishing this release as part of an 8K filing, EQT is adhering to regulatory requirements, but it's the content of that release itself that truly matters. We'd be looking for signs of operational efficiency, cost discipline, and prudent capital allocation. For example, if they reported significant debt reduction, it would signal a stronger financial foundation, potentially lowering their risk profile. On the other hand, if their debt levels rose without a corresponding increase in assets or earnings, that could be a red flag. Remember, the market is always forward-looking. So while this report is about the past quarter, it's the implications for future performance that investors truly care about. Are they poised for continued growth? Are there emerging risks like increased competition, regulatory changes, or unfavorable market conditions that could impact them down the line? These are the questions that a detailed look at their earnings would help answer. So to wrap up, this particular filing is essentially a pointer to EQT's official second quarter 2025 earnings announcement. It's a formal notification that this crucial financial information has been released to the public. For a full picture, we'd need to examine that news release itself to get the specific financial metrics the company is highlighting and how they're framing their performance. Now, looking at these results more broadly and thinking about EQT Corporation's position, it's clear that the energy sector is dynamic. The company's success is very closely tied to the price of natural gas and broader energy market trends. EQT's strength lies in its significant production base in a key natural gas producing region. However, a key risk for any company in this industry is commodity price volatility, which can swing revenues and profits dramatically. Their direction appears to be focused on maximizing natural gas production and delivery efficiently, which is a sound strategy in the current energy landscape, but they must remain agile to market shifts. Alright, that's our breakdown of what this particular SEC filing signifies. What's your take on how companies present their earnings and what signals do you look for in these types of announcements? Let us know in the comments. If you found this explanation helpful, give this video a thumbs up and subscribe for more breakdowns of corporate financial news. And don't forget to join our community on Discord, linked in the description, for even deeper discussions. Thanks for tuning in, and we'll see you in the next one.